Today, I'll be presenting some of our innovation initiatives at the CBRT, the Central Bank of the Republic of Türkiye, with a special focus on our CBDC work. Okay. So the research and implementation of technological advancements obviously play a crucial role for central banks in managing their core functions effectively, more effectively enhancing financial inclusion and establishing an innovation base within the financial system. Therefore, adopting these solutions is not merely a nice to have for central banks, but a necessity in the age of digital transformation. So in this context, we conduct research at the CBRT to identify pain points in the financial system and explore respective technological solutions, generating new ideas and uses in the process. And to test and refine these ideas, we conduct proof of concept, POC, studies. Efforts beyond POC, POCs often require expertise from multiple disciplines, making it essential to create environments where teams with diverse specializations can collaborate. So we have a dedicated R&D innovation team for financial technologies, and we carry out various digital innovation efforts by specialized subgroups under the topics of payment systems, CBDC, digital identity, e-money, stablecoins, and artificial intelligence. Let me start with payments. As a CBRT, we have been deeply involved in transforming the payments landscape in Turkey. One of our core functions is to ensure a healthy payments ecosystem that operates efficiently across the country. Beyond regulation, licensing, and oversight, we operate crucial payment and transfer systems, most notably the interbank payment system, which is not here on the slide. And it has been providing real-time transfer and gross settlement of interbank payments in Turkey for more than 30 years now, with various upgrades over time. What is relatively new in our is our instant payment system. We call it FAST, and you see it on the slide, along with its overlay services. Developed entirely in-house, FAST is a flagship project that revolutionized payments in Turkey. FAST is more than just a payment system. It is a digital public infrastructure upon which innovative solutions can be built through service layers. And a good example to overlay services is the QR code payment service, which has made person-to-person and point-of-sale transactions more secure and efficient. Other overlay services, as you can see on the slide, such as the escrow overlay and the request to pay services, can be viewed as forms of programmable payments. They demonstrate the potential for further enhancements and new business models. Let me also mention that we have collaboration with the Interbank Card Center, BKM, in the context of overlay services and open banking. For example, through the gateway Geçit, customers can enjoy open banking services. And all these products are live and operational. Stages for product maturity and related processes somewhat align vertically. In addition, whereas FAST is an in-house system, overlay services can be considered public-private collaboration. Let me briefly talk about e-money and stablecoins in the context of Turkey. Back in 2021, as a CBRT, we issued the regulation on the disuse of crypto assets in payments to diminish the potential unexpected spillover effects of crypto assets to Turkey's payment ecosystem. And while updating the regulation on payment services, electronic money issuance, and payment service providers, we added a provision to emphasize the technology-neutral characteristic of the definition of electronic money and to cover stablecoins that are one-to-one pegged to fiat currency within the scope of electronic money. So we're currently exploring regulatory framework for stablecoins that could be considered electronic money. The next topic I'd like to highlight is artificial intelligence, which emerges as another powerful tool with a transformative potential, particularly for central banks. At the CBRT, we increasingly embrace the use of AI and machine learning for a variety of purposes. An ongoing in-house project, which is currently at POC level, automates tasks such as document analysis and reporting by LLMs. This effort aims to enhance efficiency by minimizing both labor and errors. And the next step could be delving into more specific domains such as compliance. Another project that we have is about establishing a system that enables the detection of patterns through models capable of identifying them. We have completed POC here and are moving to the prototype levels. Another topic that I want to highlight is self-sovereign identity, or the SSI. Under the SSI and verifiable digital credentials model, users have the ability to selectively share their information only with the individuals or entities they want to share it with. And as part of the Digital Turkish Lira project, which I will talk about next, the digital identity system uses a permission distributed ledger designed for the SSI model. Digital identity actually is not a project of the central bank, but we are interested in many of the user scenarios, such as conditional payments. The digital identity system is essentially a registry for credential definitions and validity. The credentials stay with the users, and no identity data is in the network registry. Users store their credentials in their own mobile wallet applications in the context of the Digital Turkish Lira project phase 1. To elaborate, the KYC verifiable credentials will be retained by the users, and they are obtained through the financial intermediaries users prefer to register to the system. And these credentials can then be used for transactions across different intermediaries. So the transactions are independent of a single financial intermediary. So in our approach, a self-sovereign model is kind of integral to the success of a CBDC, as it is one of the main building blocks protecting user privacy. And now CBDC. Digital central bank money has entered our agenda as a natural consequence of digitalization, and once circulated, the digital Turkish lira is expected to make various contributions to our ecosystem. Let me start with the complementary payment channel. As I presented, the CBRT has payment systems available to all citizens through financial intermediaries and institutions. With the CBDC system, in addition to the circulation of bank money that is used in the existing digital payments, the instant and 24/7 digital circulation of central bank money will also be ensured. Another contribution, as you can see on the slide, would be enhanced financial inclusion. Digital Turkish Lira could be a significant opportunity to offer universal access to digital payment services, allowing citizens to operate independently of their registered financial institution. And thirdly, digital money would also serve as a basis for innovative use cases. We consider it a foundational element of the financial innovation infrastructure in Turkey. With the emergence of systems that can be built around digital money, let's say platformization of systems, we can move closer to this goal. And lastly, one other benefit can be mentioned that as the uniformity in digital payments, we envision CBDC as a uniform medium of exchange usable across all forms of digital commerce flows. Digital money may help achieve uniformity, addressing the fragmentation and varied payment requirements of current methods. So the goal here is to ensure that the nation's fiat currency remains seamlessly functional in various digital transactions, leaving the choice of usage to the citizens. We initiated our efforts for CBDC back in 2020 with proof of concept studies. Following the successful completion of the POC, the Central Bank Digital Turkish Lira R&D project was launched. While our bank possesses a well-established technical capacity for developing and operating RTGS and IPS, the expansion into digital currency, as you would appreciate, demands specialized expertise in cryptography, dedicated hardware, and various advanced technologies, which do not actually fall within the expertise of a central bank. So recognizing the need for specialized knowledge, we decided to collaborate with three national solution providers in our CBDC project. Currently, we are in our second phase, where we plan to address all the use cases and the requirements we have identified to be ready for the final issuance decision. That will be the third phase, along with the gradual delivery, of course, if the decision is to move forward. Let me now provide some details. On this slide, you can see the various steps we have followed to run the pilot tests for CBDC, from registration with 2 levels of verification to collecting feedback. The pilot tests involved real users and specific sale points. We named these pilot tests as limited pilot tests because they were based on prototype systems and the participation and duration were limited. But they involved real users who were not central bank employees, and they have provided valuable feedback on a real life experience. For the second phase, we work towards more mature systems and platforms and plan for user scenarios which will better inform the participants on the potential of digital money and identity. As we all know, gamification enhances engagement. In the sense, users who complete the defined individual or competitive tasks that you can see on the slide will receive verifiable credentials as rewards. These earned digital credentials can then be used to generate verifiable presentations, and depending on the scenario, they might turn into a discount in a programmable CBDC payment or a physical gift. For us, digital money will enable smart payments on a separate layer of programmability, and we prefer the concept of programmable payments over programmable money to better preserve the nature of money. The ability to program payments will certainly create new opportunities. Smart payments actually require not only digitalization of money, but also trade flows, financial assets, real-world assets, and processes such as identification. That's another issue that should be highlighted. So what we need here is not a system, but a platform. Assigning sole responsibility to central banks for creating smart payment flows may hinder innovation capacity. So instead, we are working towards platforms that integrate systems, enabling communication with predetermined standards and collaborative development environments. Although not definitive, the solution that we are leaning towards involves a decentralized common platform, and our current efforts align with this approach. What is more, in the programmability layer, payment templates can be created containing the conditions related to credentials and payment interfaces. Templates can be combined and presented for different use cases, and we expect public institutions and different licensed actors to take part in this layer, participating in the development and maintenance of these templates. This layer, the programmability layer, could also be considered an interoperability layer, connecting individual systems of money, identity, and assets under a platform model, which means that there will be many authorities involved, and the governance of both the layer and the programmability templates may provide challenges. Therefore, choosing the right model at this stage definitely matters. As you can see on the slide, we are also conducting studies on some future pilot test scenarios for programmable payments, including both the delivery versus payments scenario and the credential-based payment scenario based on various payment types. And we completed an in-house POC for programmable payments last year. The plan is that a PPP work on programmability will reach its prototype level this year. In domestic scenarios, interoperability is concerned with money and other assets. However, in international context, this relates to the interoperability of multiple countries' fiat currencies. Accordingly, the CBRT not only investigates domestic retail payments, but also delves into wholesale cross-border payments and efficient FX operations. We believe that the DLT is ideally suited for cross-border payments, as cross-border scenarios do not need a central authority, and DLT can provide a distributed platform both for settlements and governance. On the other hand, there will be numerous platforms and solution designs that should be interconnected rather than a one-size-fits-all approach adopted by nations. Therefore, we're exploring a solution that can seamlessly interconnect various cross-border platforms. And throughout these endeavors, our central focus remains on collaboration and standardization, both domestically and internationally. And currently, our experiments continue on systems developed based on a model of multiple common platforms integrated via a multilateral link platform. Our focus on the core common platforms is efficient FX operations and liquidity optimization, whereas the focus with their integration is on defining the steps for the inter-platform flows. We are designing the CBDC platform as a separate solution, parallel to our instant payment system FAST. There are, however, certain scenarios and integrations for the digital currency conversion processes. We have successfully tested a convergence scenario through FAST at the POC level, but I should note that there is no final decision on which CBRT payment system will be participating in the conversion. It could also be the RTGS based on further assessments. But additional points regarding IPSs and CBDCs could be: one, IPSs are tightly coupled with banks, but CBDCs need not be. Two, even as retail payment systems, IPSs might only have the wholesale ledger and leave many operations to the coordination of participants in the system. Three, CBDCs as legal tender can be accepted everywhere, as there won't be logistical issues the physical has. And lastly, CBDC is public money, and people will have control over their belongings. At the CBRT, we also carry out simulations of the introduction of the digital Turkish lira to better understand the adoption process and the implications to the financial system under various scenarios and parameters. The model includes various actors such as consumers, merchants, commercial banks, central bank, and the government, and it incorporates parameters such as the percentages of cash, card, and CBDC expenditures, consumers' asset distribution, the status of bank deposits, interest rates, and the size of the economy. And we are continuously working on improving the model and identifying the necessary data. The in-house application at POC level has been completed last year, 2024. And the aim for this year is to have a model framework to help conduct insightful, policy-relevant analysis for understanding the macro-financial consequences of introducing a CBDC. It should thereby help us contemplate whether to introduce a CBDC, and if so, what design choices to consider. Well, simulating CBDCs is undeniably a challenge, since there are many performance and data-related issues, and simulation applications can get quite convoluted and become a product of its own. But as its nature is multidisciplinary, there is also a way to involve many departments and authorities as to simulate the real-life conditions as much as possible and build a more comprehensive solution. As I wrap up my presentation, here are the lessons we have learned from our CBDC work. The first one is simply that money is not already digital. Of course, bank deposits and credit cards enable payments in electronic environments today, but our view is that to support the anchoring function of public money, money itself, not just the payment, should be digitalized. However, digitalization will only make a difference if it can join the islands, systems, or walled gardens. And the essence to a CBDC is not simply building a more advanced payment system. It is digitalizing all money functions and operations and unlocking new ones by also removing the periodic requirements inherent in older formats. The second lesson draws attention to not only money, but also the surroundings. Digitalization of money is only a part of the big picture, and we believe that financial assets, real-world assets, and most crucially, identities should be digitalized. Here, we're not talking about electronic card identities or producing digital representations of documents, but more about decentralized identifiers. And this does not exclude the authorities. The authorities will still decide on the document definitions, and the issuers still issue the document. However, the verification process is not dependent on the issuer or the authority's infrastructure. And lastly, setting aside the discussions concerning the demand for retail payments, there are issues within the current international system that necessitate efforts towards addressing the cross-border use of CBDCs, as we all discussed. Therefore, we have accelerated our design processes to address the requirements of cross-border payments with a special focus on this area. Here, let me note that the development of the digital Turkish lira is an ongoing journey, actually. As with all their digital products, continuous improvement and commitment to absolute security are imperative for the digital Turkish lira. I had one more slide to wrap up all the topics I've covered, but I have far exceeded the time allocated to me. I hope the topics I've highlighted today have resonated with you, and we can continue having related discussions and strengthen our cooperation. I'll be happy to have your questions during the break. Thank you.